So the trade desk isn't exactly the most exciting company in the stock market. We know this. It doesn't build AI robots, it doesn't launch rockets, and nobody is standing in line overnight to buy its latest product. Instead, the trade desk does something far less glamorous. It helps companies figure out where to spend billions of advertising dollars. And believe it or not, that may be one of the best long-term businesses in this market. The stock has seen its fair share of volatility recently as investors worry about ad spending, competition from big tech, and whether the economy is headed for a slowdown. Those are all super real concerns. But here's what makes the trade desk interesting to me, at least, not financial advice. Every year, more advertising dollars leave traditional television and move towards streaming, digital video, retail media, mobile apps, and programmatic advertising. And the trade desk is sitting right in the middle of that migration, collecting tolls every single freaking day. Think of it like this. During a gold rush, some people dig for gold. Others sell the picks and the shovels. The trade desk, they are selling those picks and shovels. The company doesn't need Netflix, Disney, Amazon, Walmart, or Spotify to win if it benefits from advertising spending across all of those. And that's a pretty nice place to be right about now. And recent earnings continue to reinforce that story. Revenue growth remains strong, customer retention stayed above 95%, and management highlighted momentum in connected TV, retail media, and international markets. Translation: customers are not leaving; they're spending more. What really gets bulls and people like me excited is where advertising is heading over the next decade plus. Connected TV is still taking share from traditional TV. Retail media is exploding, and advertisers are demanding better measurement, better targeting, and better returns on every single dollar spent. That's exactly what the trade desk was built for. Now, there are definitely risks. Google, Amazon, and Meta, they are not exactly known for rolling over and giving up market share. Advertising budgets can get cut during economic downturns, and ad tech changes super duper fast. But the trade desk has one advantage that's easy to overlook for a lot of investors: it is independent. Unlike some competitors, it isn't trying to sell its own media inventory. It's focused entirely on helping advertisers get better results. That neutrality has helped it build trust with brands and agencies for years. The company's AI-powered platform Kokai is another potential catalyst, and unlike many companies slapping AI onto a press release and hoping investors get excited, Kokai is actually improving campaign performance and automation. Imagine that. I mean, using AI to make money instead of just talking about it. So, the bull case is pretty straightforward in my personal opinion. Advertising is becoming more automated, more measurable, and more data driven every single year. And if that trend continues, the trade desk doesn't need to dominate the entire freaking industry. It just needs to remain the leading independent platform helping advertisers navigate it. And if management keeps executing, today's stock price may eventually look a lot more interesting than the company's name. So if you like this video, give it a like and subscribe. If you didn't, just don't do that. But yeah, I don't really know how to end these videos. I'm just going to hit pause and end it right here.